So I tell all my clients, like, we don't give advice that's strictly in our benefit. We only give advice that's for you.
What are some things that maybe you can share that have changed now about how you do business or what you've learned from the beginning to now?
I've taken a step back now, and like I'm much more efficient and productive. My branch manager brought me in her office and was like, Mike, this career is not for you. People are pissed, and it's a little bit of like a cutthroat environment. It's like very sink or swim.
What was the impetus for you to start doing personal development?
I think that it really comes down to one thing. Doing a lot of change in your life is, when you look back, you're like, oof, it was a rough couple of years.
It's not easy to look inward and to do the work, and it's uncomfortable.
It's very uncomfortable. Sometimes I'd be overwhelmed and my phone rings and I'd be like, oh, who's calling me now? Now I'm like, oh, who's calling me? Who wants me? Or who needs my help?
So it's just about changing that perspective shift.
It's working with someone who's really competent at what they do. So I'd say talk to a few people. Don't just go with the first person that you meet.
Anything else you think that people need to know or... Michael, welcome to my podcast. You are officially episode number 2.
Thank you so much for having me. I feel so honored.
Amazing. Yeah, I thought, having a mortgage broker on, you're a mortgage broker. We can get into how you started in that. But I just feel like sometimes there's a lot of misconceptions around mortgages in general, but definitely around mortgage brokers. Do you think that mortgage brokers had a bad rap, and is that kind of over? What do you think about that?
Yeah, I definitely feel like they had a bad rap. And I used to think mortgage brokers had a bad rap before I became a mortgage broker. So a little bit about my history. I'm a former banker, and I got into banking when I was 18. I'm 37 now. So doing mortgages I was probably about 21 or 22 when I started doing mortgages. And so I'd heard about mortgage brokers, and they charge fees and they do shady things. And then closer to my last few years in the bank, when I was okay, I think I'm over the banking world. I started to see a lot of the benefits of mortgage brokers. And now that I'm in the mortgage broker world, I think a lot of those misconceptions, are almost all gone. I still hear stories, but I don't do business like that. So, and you can get bad service and bad advice from people in the bank as well.
Facts.
And yeah. And really, it comes down to who you're working with. So if you get bad advice, I think that's where you can get financially ruined if you're a client.
Mm-hmm.
And so that can happen anywhere.
Fair. And I would also say too, and this is something that I tell people, is that, a mortgage broker deals with all of the A banks that you would deal with, as well as B lenders, which we can talk a little bit about the difference of that. And they're going to look out for your best interest and find the best mortgage for you specifically in your situation. Whereas if you walk into CIBC, they're not going to sell you RBC's mortgage or RBC's product, even if it might be better for you, right? So and they're like, oh, that makes sense, right? So that I think is also something that people don't realize.
Yeah, they don't realize that. And it's true. And they can't sell other banks' products. And I used to be one of those bankers. I worked at HSBC, and most people didn't even know what HSBC was. They used to think I worked at the Bay. And then I went to TD, and it was incredible. I loved it, especially coming from HSBC. I'm like, wow, the culture here is so nice. It's so much more aligned with my personality.
Mm-hmm.
I felt like you were free to be yourself at TD, which I was a huge change from HSBC. But eventually you kind of are like, okay, I need more options for my clients because I had files I couldn't get approved.
Yeah.
And it's not a good experience when someone like you who sends me your client, and I can't get them approved at TD where I'm working, and now I need to move them on to someone else.
Mm-hmm.
Whereas now if you send me someone and we look at all avenues, and we don't just jump from straight to B lending or private lending. We look, how can we get this done at a big bank at a great rate? And if we can't do it there, we explain it to the client, and then we'll say, here's what we can do for you, at a B lender or at a private lender. Yeah. And so it's more of a one-stop shop.
Yeah, you're not leaving the money on the table anymore for yourself anyway.
Yeah.
And then, also banks, or correct me if I'm wrong, banks have a small box that you need to fit into. And if you don't fit in that box, then you don't.
You're bang on. Every bank has their own policies.
Mm-hmm.
And so when I was at TD, we really had to make you fit in that box. And same thing with at HSBC. And when I moved over to the broker side, it was overwhelming because we had so many lenders and I felt like I had to learn them all at once. But I took baby steps and you kind of learn them, and you need to really understand how they work by working with them and touching a lot of files and trying out different lenders. And so now, after being here for 3.5 years on the broker side, usually after talking to a client for half an hour, I know where the best solution is, but I still like to sleep on it and then go over it with the client to make sure it's the right fit for them. But yeah, there's a lot of different policies to know.
Yeah. So that's kind of a good segue into like, what is the difference between an A and a B lender? And what are some of the misconceptions around B lenders that are wrong?
Yeah. So A lending is what it sounds like. You're with a big bank there are other types of A lenders that are probably not so well known, like RMG, RFA, Strive. But like most people know of like the big banks as A lenders, you get a great rate. There's no fees. And there's also misconceptions too with mortgage brokers that we charge fees. When we work with big banks, our services are totally compensated by the lender. So our services are free.
Amazing.
Yeah. And I've always been a big proponent for like working with commission people. I think some people who, are in salaried jobs might look at it like, okay, they're maybe not looking out in my best interest, but I think the opposite. I think when you're working with someone who's commission based, you get a much higher level of service. And I see it every day. Like I get clients call me and they're like, I spoke to TD or I spoke to CIBC and no one's getting back to me. It's like, yeah, I used to be those guys in the bank who, just had sales targets and they wear so many different hats and they have so much on their plate that they really probably don't have time to get back to you.
Yeah. And I guess if you aren't you're not coming in for a big mortgage, you're not really helping their quota much, maybe. I don't know.
Yeah, you might not be helping their quota. And you know what? A lot of the people in the branches are they're young, they're inexperienced, and it's just tough. They have a lot going on and they don't specialize. And that's kind of the main thing. Like, they're doing your banking, they're doing your GICs, mutual funds, selling credit cards and mortgages. Like they don't have time to like really just hone their craft on one specific aspect of banking. And when you're a specialist, you're a specialist.
Yeah. So what are the types of people or clients that typically won't be approved by an A lender? And I know there's no like wide paintbrush we can use, but generally, what's the rule of thumb?
Yeah, we could use a little bit of a wide paintbrush. Like,
okay.
I'd say common ones are self-employed clients.
Mm-hmm.
If anyone out there is self-employed, you probably don't claim a lot of income.
Right. For tax purposes.
For tax purposes.
Yeah.
And you probably have a lot of your expenses that are personal, but you can put them through your business, like
right.
vehicle.
Correct. Yeah.
Expenses that you can use for your home that might be considered office expenses,
mm-hmm.
meals,
mm-hmm.
Some type of entertainment. So, and I'm self-employed, so I operate somewhat the same, but within the confines of accounting.
Yeah.
So
the law.
Yeah, the law. I guess you could call it the law. I have a good accountant and he tells me I can't write off things and I just say, okay.
Fine.
I can't write off my golf membership. Okay, yeah. Sure.
Really?
Yeah.
Oh, that's surprising, actually, especially if you're getting clients there.
It's surprising because I hear of other people that write it off. So.
Oh, interesting. So he's a little bit more risk adverse. This is probably works in your favor.
Yeah, he's a little bit by the book.
Yeah, that's a good thing, I think.
Yeah. So yeah, self-employed clients, because they don't write off a lot or they don't claim a lot, we need to go by their net income.
So it's like a stated income.
It's kind of like stated income. Yeah. But we need to go by their net income on their tax return, their personal tax return. And then we do a great job with self-employed clients because if you have financial statements and you've been in business for a few years, we can look at your net income after tax and then add a portion of that, or maybe hopefully all of that, to your net income that you claim on your personal tax return.
Oh, I see. Okay. So you are taking the net income without expenses? Is that what it is? So it's not what you're claiming to the government. You get to put some of that back in.
Yeah. So you'll have your gross income, and then after all your expenses, we get to the net income.
Mm-hmm.
And that's what we technically have to go off of. And a lot of self-employed people don't understand why. And I'll give you kind of the real reason why. It's because the big banks are regulated by the federal government.
Mm-hmm.
B lenders are regulated by the provincial government. So the big banks are in bed with the federal government. They're in
CRA.
CRA.
Right.
So they have a fiduciary obligation to, qualify clients based on their net income.
Right.
And then that, I feel like that kind of forces self-employed clients to say, okay, maybe I need to claim a higher income next year.
But should they?
I'd say 9 times out of 10, no.
Okay.
Yeah.
Because you're going to pay more in taxes than you will on the extra point on the interest rate, for example, by going to a B lender.
You nailed it.
Yeah.
So yeah, you actually need to pay a higher income tax, not just for 1 year, but for 2, because we need a 2-year average. So let's say, just using round numbers, you need $100,000 income, but maybe you're claiming 50.
Yeah.
You need to claim 100,000 for 2 years.
Right.
So now you're paying extra tax on 50,000 times 2. So you're paying extra income tax on $100,000 versus paying a slightly higher rate with a B lender. And by the way, I should preface with saying the 1-year fixed rates with B lenders right now are actually a bit lower than the big banks.
Interesting.
Yeah.
Yeah. And there's also some misconceptions around people get so hung up on the rate. It's like, I want 4.89. I want 4.89, but you're getting them like, let's say 5.02. And when that translates down to dollars, it's like $20 a month difference, right? In those 2 percentage points. But people get so hung up on this point percentage.
They do, and it might be like about pride. Or I find a lot of clients, they talk to their friends, their neighbors, their coworkers, and they're like, "How did you get that rate?" And my broker's getting me this with a B lender, and it's like, it's cool to factor in just that, but I think you need to look at the picture much more holistically.
Like what?
And like your opportunity cost.
Yeah.
Like, what's it going to cost for me to get into the home now? Like, are we having a baby? Are we going through a separation? Do we need the home now? Or what if we don't buy now and we buy in a year or 2 years in the time it takes me to claim that higher income? Is the market going to get away from me?
Yeah.
And we've already come through 3 years of like a bit of declines, depending on what area, maybe just stagnant real estate prices.
Yes.
But that demand is still being pent up, especially in the GTA. And so, yeah, if you wait 2 years, maybe that $800,000 home might be $1 million.
Right.
So now you just missed out on
absolutely.
$200,000 of appreciation.
Yeah, absolutely. And to your point again, like you're going to pay more in income tax to get that better rate, but the numbers just don't make sense when you crunch them, right?
No, they don't make sense. So you might as well, just look at the options. B lenders do some really phenomenal things with self-employed people. They use common sense lending.
Yeah.
So what we do is that's called stated income. So we take their bank statements, we take all their income, and then we strip out only the expenses that are regular for their business. Like, do you pay for a vehicle? Do you have a shop? Do you have any rent? And so typically that results in a much higher income that we can use.
Yeah. And a closer reflection of their actual income, right? Yeah. Fair. Yeah. I love that. Very quickly, because I feel like this day and age, just about everybody knows the difference between a fixed and a variable rate. But just to cover that base very quickly, can you describe the difference between a fixed and a variable rate?
Yeah. Okay. Let me try my best.
Yeah.
So a fixed rate, that's your rate for whatever term you choose. So if you choose it for 3 years, that's your rate for 3 years. It's not going to change for 3 years. Or if you do for 5 or 10, I don't recommend 10. Variable is, it moves with the prime rate. And some clients I speak to say, well, I don't want it to fluctuate every month. It doesn't fluctuate every month. It fluctuates depending on what's going on with the Bank of Canada overnight rate. And so that changes based on what's happening in the economy. So when the economy's struggling, the Bank of Canada cuts rates. They don't cut rates to make home prices or home loans more inexpensive. They cut rates to make money cheaper for businesses to invest in themselves. Homeowners just so happen to benefit from it.
That was actually very, very good.
Oh, good. Thank you. So there's 2 types of variable rates. One's an adjustable variable rate, and one is a static variable rate. The difference is when you have an adjustable variable, when the prime rate comes down, your payment will come down and your rate still comes down. With the static variable rate, your rate still comes down, but your payment will stay the same. So a little bit more will go towards principal and a little less will go towards interest.
Oh, that's interesting. So for somebody who wants it just to be like, they don't want any surprises, you do have a variable rate, no surprise option.
You do.
Essentially.
Yeah. In this environment, I think cash flow is important for like probably 9 out of 10 people.
Mm-hmm.
So they like the idea that their payment will drop with each rate cut.
Yeah.
And then you still have the ability to switch to fixed anytime free of charge.
Oh, that's interesting. You can go from variable to fixed, but not from fixed to variable.
Exactly.
Interesting.
Mm-hmm.
So I know that they've just changed the amortization rate. They increased it, right, to 30 years, I guess, or is that correct?
That's correct.
Okay.
Yeah. You nailed it. They
Okay.
did
And
that
so
for...
like, what are the pros and cons of like increasing your amortization or not?
Yeah. I think the pro for increasing your amortization is that you have a lower monthly payment. Right now, I think a lot of Canadians are faced with like a cash flow crunch. Like they'd rather have a little bit more cash in their pocket to pay for the higher cost of living right now. I think if you ask anyone, like it's significantly more expensive to live now than it was 10 or 15 years ago.
It's insane. Like I'll walk around the grocery store and I'll be like, how is this $7 for cauliflower? I'm like, I'm not buying it. Like just out of principle. I'm like, I'm not buying it.
Yeah, just leave it.
Yeah.
Like go buy some broccoli.
Yeah. Which was on sale last week and I did. And my kids love broccoli, so that's good. Good
Same
for
with
us.
me.
Yeah. I want to talk a little bit about and to the first-time home buyers. I feel like there's a lot of people who were hesitating during COVID and then interest rates shot up and there's a bit of a backed up, like a pent up supply of buyers sitting on the market, first time home buyers who are seeing these rate drops and they're thinking, okay, what can I do? I also worked with a lot of renters as well. And a lot of them are saying they just want lower rent. They can afford a nicer place, but they want lower rent so they can save up because they want to buy a place. So if you are currently renting, and you want to buy in the next year or so, what is some advice you would give to those people to put themselves in a position to be able to do that?
Yeah, I'd say save, get your incomes up, try to do away with any debt that you might have. So if you have any student loans, if you have any credit card debt, get that paid off.
Yeah.
And then when you think you're in a position to buy, reach out to you.
Mm-hmm. Yes, please reach out to me.
Reach out to Sabrina. She's incredible.
Thanks.
And I'd say push yourself to your limit.
To the maximum of what you can afford.
Yeah.
And in terms of a down payment, if someone's trying to figure out doing rough math, like how much should they be saving for? Or like percentage wise?
For their down payment?
Mm-hmm.
I think in an ideal world, if you can get to 20%, do it.
Okay.
I think it's really hard if we're generalizing first-time home buyers as young people, I think that's really hard with the cost of living.
Yes.
So, but if you have help from family, yeah, get to the 20%. If you can't, you can still buy with less than 20%. And the new CMHC rules have really helped. So now you can go to a 30-year amortization. So you're in a level playing field with people that have 20% down, and you can go to a $1.5 million purchase price. And before it was one.
Right. Before you have to pay insurance, correct?
Well, no, that's if you put less than 20% down.
Right.
Yeah, the cap used to be $999,000 and now it's $1,499,000.
Right.
Which is great for the GTA because a lot of homes are over $1 million.
Most of them. Yeah. Unless they're condos. But even then, there's lots of condos that are obviously very expensive.
Oh, yeah.
What are some of the things that first-time home buyers or any home buyer actually needs to know before starting the mortgage process? I've heard before too, it's like, don't make any major purchases or don't little things like that people don't really realize that they should not be doing before they want to qualify for a mortgage.
Okay, good. You helped me out there because I was like, oh gosh, I don't know how to answer that one. But those are actually really good tips. Yeah, definitely don't go make any major purchases. Don't get a car, or just at least have a conversation with a mortgage broker first, so that we can kind of advise you on it. Don't miss any payments from the time we do the pre-approval until you purchase.
Mm-hmm.
That's only ever happened to me once, where a client had a couple missed payments from when we started the application to when they bought.
Yeah.
It wasn't pretty.
And their credit score went down, I guess. That was the result.
The credit score went down, and it was like a very one-off weird situation where it was a furniture loan that came due and there was some confusion with it.
I hate when that stuff happens. I now have everything set up on automatic because just trying to remember the due dates of everything. And it was like for a $30 bill, it's not like I couldn't pay it. I just missed it. And then, I paid it just late, but it dings your credit report and then it shows up there. And so guilty.
Yeah, life happens. And, there's medical issues that come up and like, yeah, are you going to pay your bills if like you're in a hospital bed? No. So
yes. Oh, that's a really good point too. Like at least when it's on automatic payment, it's happening when you can like manage the rest of your life and not think about it.
Totally.
Never even thought about that.
Yeah. I mean, things happen, right? So yeah, I think the main thing is stay on top of your credit. Have a conversation. Like we put really good plans in place for getting rid of some debt and allocating some more money to your savings and down payment. And making sure that you have money available for closing costs because it's not cheap.
People forget about closing costs. Let's talk about that. What are the closing costs?
Yeah, your main closing costs are the land transfer tax. I'd say that's about 95% of your closing costs.
And for those who don't know, the land transfer tax, if you live in Toronto, is double. So you pay the provincial land transfer tax, or is it federal? Don't know. And then you also pay the City of Toronto land transfer tax, which is the same percentage. It's literally double and insane.
It's crazy. Like I think our land transfer tax when we bought in Etobicoke was like, it was over 50,000. It's just wild.
But does that get folded into the mortgage? You don't need that up front. Or do you?
If you're putting a big down payment down, we can incorporate it into the mortgage if you have more than 20% down. But I mean, it's kind of like just moving money from your left pocket to your right pocket. But no, you can't include it into your mortgage technically. No, you have to have it ready to go.
Wow.
Yeah.
Yeah, that makes it difficult for sure.
Yeah. I mean, you do get a first-time homebuyer tax credit. It's about $4,000 if you buy outside of Toronto. And it's about $8,000 if you buy in Toronto. But then your land transfer taxes are double in Toronto.
Right. So they give you the double discount.
They give you the double discount, yeah.
So for people who are thinking, they're like, okay, I don't have enough money for a down payment yet, but I would like to get a plan in place. Is that okay to approach a mortgage broker to chat about like, hey, like, let's come up with a plan so that I can get there?
Yeah, we put plans in place for clients. And like I have clients that we put plans in place for 2 or 3 years ago and then they buy a year or 2, 3 years later.
That's really, really good.
Yeah.
Maybe we'll set up some sort of like seminar where people can come and like chat and just get ready, get their ducks in a row, Yeah,
totally. I think a lot of first time home buyers are like, I don't even want to have a conversation with someone. I don't want to waste their time. It's like, you're not wasting anyone's time. Like, we're here to help. That's what we do. Like, I don't ever think, oh, this is a waste of my time when I'm having a conversation with someone.
That's really good advice. Like just giving the permission for people to just go and get it done. And because otherwise it's like, if you aim at nothing, you'll hit nothing, right? Isn't that kind of that saying? I've just butchered it, but
yeah, no, you got it. And
you need to have a goal in mind, and you might as well have like an educated goal that someone who's an expert in the industry helped set for you, right?
Yeah. And you're not really going to get anywhere if you don't have a plan.
I want to get into a little bit about mistakes people make when applying for a mortgage. Like, I'm sure you've seen some things go sideways. So like, what are some of the big no-nos or just rules of thumb when getting a mortgage to set yourself up for success?
Yeah, I'd say I think that it really comes down to one thing. It's working with someone who's really competent at what they do. So I'd say talk to a few people. Don't just go with the first person that you meet.
Mm-hmm.
If I remember, I'll tell clients, yeah, shop around. Like we more or less all will offer the same rate. It's just about how diligent we are about finding the best rate for you. But if you work with someone who just tells you what you want to hear, it might not work out great for you.
Yes.
And I pick up a lot of deals from people who are like, I had a bad experience and I need help getting out of it.
So they were put in something that is not going well, and then you have to come fix someone else's mess.
Yeah. Yeah. And it's okay because I love helping people like most men do. It's like, I like solving problems. So
keeps it interesting.
Keeps it interesting. And, I like feeling needed. So if I can add value, it makes me happy at the end of the day. But yeah, I mean, there's cookie cutter deals. They're like, okay, this is what we do. And, it's still somewhat problem solving. But yeah, I do like a challenge. Yeah,
fair enough. Outside of like the rate and the term and the things that people are familiar with, like what are some of the other components to a mortgage that people should pay attention to, aren't aware of, and are surprised by? Yeah, I think prepayment privileges is a big one. What's that? So
how fast you can pay your mortgage off, or like what kind of abilities do you have to pay your mortgage off quicker.
Mm-hmm.
And they vary a little bit between the banks. Like if you want like really flexible prepayment privileges, TD I think is probably the most flexible.
So if you come into more money and you want to throw down a bunch more money on your principal, then some banks don't allow you to do that.
Some do, but yeah, it just depends on how flexible they are. So some banks will say, okay, you can make a prepayment or a big lump sum payment on your mortgage, but it needs to be on your anniversary date of when you got the mortgage. Yeah.
What's the diff, Biff? Like,
I know. What is the big deal?
You got to wait for this big anniversary date to put money on it. Why do they do that?
I couldn't tell you why they do that.
Okay.
But I can probably tell you why they don't change it.
Okay.
So when you're dealing with banks, like these are huge organizations, so making a change like that probably takes a lot of people and a lot of willpower to do it, and it's not easy. And when you're in a big organization,
yeah, like a lot of red tapes. People need to sign off.
For red tape.
People need to sign off on things. Yeah, you got to get 50 people to agree. They're like, forget it. Just wait 6 months until your anniversary date.
Yeah, it's like a step down from government. Like how much changes in government? Not much.
Yeah.
So
it's true. Just the face. And we have an election coming.
Exactly.
Are there special mortgage programs for specific groups? Like I know we talked a little bit about self-employed people and that they're probably a better fit for B lenders sometimes. But are there like seniors or self-employed people that there are specific like special mortgages for different types of people?
There's special mortgages for newcomers to Canada.
Oh, tell me.
Yeah. So newcomers to Canada, if you come within the last 5 years,
okay,
you might not have as much credit history built up, or you might be working outside of your field. But we know that you'll probably gain employment in your specialized field. And so we can maybe use a different income for you, or we can give you a little bit of an easier path to an approval just because you're still getting established here in Canada.
Interesting. So they'll take a look at what you did back home or back where you came from previously and what you were making and factor that in somehow? That's
depending
tricky.
on the lender, yeah. It's really very dependent on the situation. But yeah, there are lenders that will look at you coming over from, wherever your home country was, and how can we apply your income over there to a specific field over here.
I love that. That's great.
Mm-hmm.
Anybody else?
Yeah, there's great programs for professionals like doctors.
Oh.
Some doctors, they just got into medical school, and they might not be making as much as they are going to be making in a year or two.
And they have a lot of debt maybe from school.
They definitely have a lot of debt.
Yeah.
And there's some really cool programs where it's like, okay, you're a dentist. Here's what income we can use for you.
Mm-hmm.
Maybe you're only making like $50K now, but maybe we can use $180.
Interesting. So they're banking on knowing that there's a set standard for income for different professions.
Yeah. And I had one instance where we were working with a surgeon. And so it was like, okay, you can use, I think it was like $250 or $300K income, but the true income for that client was probably more like $500,000. So we worked with them to try to get it up a little bit. But yeah, those are some cool programs for specialized professionals.
Amazing. So you started in banking and then you ended up in mortgages. But how did you kind of like get all the way there? Is this like, were you always good with numbers? It's like, how did you find yourself here?
You know what? Mortgages is like basic math. So I hope I'm good with basic math.
Okay. Calculators.
Yeah, calculators. And I mean, there's even mortgage people that I know that don't really know how to like calculate how much you'll qualify for like on the spot. I need to like input it in our software.
Yeah.
But it's really just basic math. And I think you can impress the client by just saying like, yeah, okay, here's your income. Here's how much debt you have. You'll qualify for X amount.
Yeah.
Before we even do the application. They like that.
Yeah. Like party tricks.
Yeah.
Math party tricks.
Yeah, you'd be shocked. It's like, I don't know why people don't know how to do math, but it's not that big a deal. But yeah, I got into banking when I was 18.
That's pretty young.
Yeah, I was at a wedding.
Oh. As one is, you know.
As one is, not mine.
Okay.
And I was pretty drunk.
Nice.
And my older brother had his new girlfriend there, and her and I were like at the bar and just getting really wasted, and we were having a great time chatting. She's like, what do you do for work? And I said, oh, I work at No Frills. I work in the produce department.
But you're 18. What do you mean, what do you do for work? You probably just finished high school or something.
Yeah, I finished high school. Oh, I'm in school, and I work at No Frills.
Mm-hmm.
And yeah, she's like, well, have you ever thought about working in the bank? And I said, nope, never. And she was like,
Not till right now.
not till right now. And she's like, well, why don't you come in for an interview?
So she worked at the bank, I guess.
She was the manager at the branch.
Okay, got you.
And so I went in, and the interview was just, how was the commute?
Yeah.
And I'm like, it wasn't great.
I'm still hungover.
Yeah, I'm still hungover from the wedding. And it was a long commute because I lived in Richmond Hill and the branch was in Forest Hill.
Mm-hmm.
So it was like an hour and a half commute.
During rush hour.
I didn't even
Coming
drive.
south.
I took public transit the whole way there,
Nice.
an hour and a half there and an hour and a half home.
Oh, geez.
And I did that for like, I went in and she liked me and she's like, if you're okay with the commute. And I said, you know what, let me try it. And then I was a teller for like 3 years while I was in school. And then the natural transition from there was like an account manager role.
Yeah.
Yeah. And I did that role. I wasn't great at it.
You didn't like it?
I didn't like it. Not to like badmouth like branches, but they can be like pretty hostile environments.
Really?
Oh, yeah.
Because of the other workers or because of the people coming in?
I'd say it's like 80-20. And
People are pissed.
people are pissed, and it's a little bit of like a cutthroat environment. It's like very sink or swim. And so, yeah, if you can make it in a branch, you can make it in any career path.
Oh my gosh, I've been in so many branches. I had no idea what I was in.
Yeah, they put on a nice face. The TD branches are really nice. I do like TD.
Who knows what's going on behind those doors?
You don't even know. Yeah, there's a lot of bullying going on in bank branches around Canada.
You know what? It's funny, and it's not unique, I don't think, to banks, but I will say that I worked in advertising for a number of years at the very beginning of my career, dealing with some middle management people at some big companies, whether it be consumer packaged good companies like Kellogg's or whatever, or if it was like fast food places. The middle management there, sometimes I feel like they get a little bit of power and they like to swing it around for lack of a better term, and they do create very negative environments, and even at the banks too. I have a family that worked in the back end of other banks, like not branch side, but like, where they do other things.
Yeah,
like
the back
investments.
office.
Yeah, investments and like downtown banks or whatever. And same thing. It's like, it's like they kind of throw their seniority around a little bit and just, it's like, buddy, you're just you.
I think you nailed it. Yeah, and it's just, we're all just people trying to like do a good job, and you don't need to like put anyone down at work.
Yeah.
Yeah.
I hope that culture is changing a little bit. I feel like people are becoming like more self-aware, a little bit more evolved. I don't know if that's just because that's who I choose to surround myself with. But I do feel like generally people are kind of like awakening a little bit.
They totally are. And I think a big part of it is who you surround yourself with. So you're doing a good job. Yeah. Yeah. The banks, it was tough. Like when I was an entry level account manager, my branch manager brought me in her office and was like, Mike, this career is not for you.
And like, thank God somebody said it.
Yeah, thanks. And I was like, okay. But anyway, I kept at it. I got moved to a different branch, probably because she didn't like me.
Yeah.
And it was okay. It worked out great. I had a great manager, and then I had some other good managers who I learned a lot from.
Yeah.
And but the thing with the branches is like there's not a lot of money there.
Mm-hmm. In terms of like your salary.
In terms of your salary, and it is pretty demanding. Like I'd be in meetings all day and like have barely any time to do the paperwork, and there's a ton of paperwork. But you do learn a lot. Like you have thousands of client conversations.
Yeah.
That really helps you for like when you move into roles like mine where you have much higher earning potential.
Yeah. And then now you know the back end system of the bank. So you know what they're looking for. You can answer the questions before they ask. You know what I mean? It just makes you better at what you do now, for sure.
Yeah, totally. I think I marinated a bit too long there.
Yeah.
But better late than never. Like I think I left in 2017.
Yeah. What are some things that maybe you can share that have changed now about how you do business, or what you've learned from the beginning to now?
I'd say it's mostly about mindset.
Mm-hmm.
Like I used to be happy keeping myself just busy, but not, it didn't matter if it was busy with like very productive things or unproductive things. As long as I was busy and my mind was occupied, I was happy. I'm a busybody. I like to be busy.
Yeah.
I like to be useful and needed, but I've taken a step back now, and like I'm much more efficient and productive. So I think being busy with things that are actually work towards my end goals.
Yeah. Things that actually move the needle.
Yeah. And I've become a much better delegator. So I have my assistant Grace, who's I think of her mostly as my boss, not my employee.
She keeps you in line.
She keeps me in line, and I've gotten a lot better at like leaning on her and delegating.
Yeah, that's key, delegating, especially if you have someone you can trust. I think too, for me, even, I've had assistants in the past, and once you get into that rhythm, you can sort of like bounce past things to them without looking. It's such a good feeling when you know it's being taken care of, and it takes time to get there. But, if somebody's responsible and,
Yeah, it takes time to get there, and she was always there.
Yeah.
She is one of the most incredible people I've ever met.
Yes. Aw.
But it's a lot of it had to do with me and feeling comfortable letting go.
Yeah. Yeah. Having that trust or whatever.
Yeah. And it wasn't even trusting her. It was just trusting me to like let go. She's got it.
Yeah. And so we talked about, you mentioned mindset for a minute there. So like, what are some of the, or do you do anything to like keep your mindset positive? I know for me, moving my body and going to the gym is key. Sometimes when I don't fit it in, my productivity goes down. And so I realized like I need to go carve out this time to go to the gym because I will be more productive throughout the day. I actually have more energy throughout the day, things like that. I'm a big journaler. I know a lot of guys aren't journalers, but things like that sort of keep me positive. Is there anything that you sort of incorporate on a daily?
I think that's incredible. Yeah, I like to move my body too. So I try to get my time in at the gym. This winter has been like really special. Like this is the first time I've like really got outside and like embraced winter since I was a kid.
Oh, good for you.
And so I've been having the best winter I've had.
What have you been doing? Snow angels? Tobogganing. Okay, that's fun.
A lot of skating.
Do you have like the disc that you go down or like the sled? Like what is your toboggan style?
We got the GT snow racers.
Oh, amazing.
Because that's what I had when I was a kid.
Nice.
And so my wife saw it and she was like, what is that thing? Like, why did you buy them? Like,
don't you know what this is?
Like, this is what the kids need. Like, they need a GT
How old are your kids?
4 and 5.
Oh God, do you put them on there?
Yeah, they love it.
Okay.
They love it. It's so fun.
Where you steer?
You steer. It's got brakes. My
Brakes
mother-in-law went down on the weekend.
Okay, that's fun.
She was a little scared.
Was it Nonna?
No, it wasn't Nonna. No, Nonna would never. No. This is my wife's mom.
Okay,
she's much more adventurous. Yeah.
Or they don't call her Nonna.
They call her just Grandma.
Okay.
Yeah, she's not Italian.
Okay, well then she doesn't get the name Nonna.
She doesn't get Nonna, but she's special.
Oh.
Yeah. So yeah, the tobogganing. We've been skating a lot.
Oh, that's good.
So a lot of skating, a lot of shinny, or like just kind of like pick up hockey.
Yeah.
For the little kids.
Yeah. Oh, that's fun.
It's been an awesome winter, and honestly, like I think just because I'm like outside, I think being outside is really great for mindset.
Yes, I agree. That's something I really miss about not being so cold is like not being able to walk outside and be in nature and hear birds,
Get out a little bit more. I mean, there's some days that are better than others.
Yeah, I don't like the cold. I get in the cold, my body just doesn't like it. I'm just like, no, like I'm Mediterranean. Like I need to be.
Me too.
Some people are mountain people. I need water. I need shore.
Me too.
Yeah.
I'm a total beach guy, and yeah, every winter before this, I'm like, when is it over? I'm over this winter. I just want spring. Now I'm like, I'm good. I hope winter keeps going for a while.
See, that's so great. It's going to happen anyway.
It is.
It's going to be here till April, whether we like it or not. So to embrace it and enjoy it more, I think that's really smart.
It's so great. And it wasn't even my intention. It just kind of happened.
It's the ultimate surrender.
Yeah, I totally just surrendered and it's been good. But yeah, going back to like other mindset stuff, I think just having like a positive mindset and not being stressed about little things. Like sometimes I'd be overwhelmed and my phone rings and I'd be like, oh, who's calling me now? Now I'm like, oh, who's calling me? Who wants me? Or who needs my help? And it's just changing that tone in my own head.
Such a great shift to go from who's calling me to who do I get to help now? Like, ooh, like that excitement factor.
Yeah.
And you're right. It really is like everything is perspective, right?
I've done a lot of personal development over the last 2 years. Doing a lot of change in your life is when you look back, you're like, oof, it was a rough couple of years.
It's not easy to look inward and to do the work, and it's uncomfortable.
It's very uncomfortable.
Yeah, but it's necessary.
It is.
Like, it's necessary to change. Like, you know, if you keep doing the same thing, you're going to get the same results, right? What was the impetus for you to start doing personal development? Like, what was it that made you start?
It was like a combination of things. I felt like it was around the time when the market started to go down, and I was getting really frustrated with losing deals at work, but also like we had young kids.
Yeah. Is all the pressure on you to be the income earner as well?
No, my wife makes decent money, but
that's good.
Yeah.
There can be a lot of stress and pressure, right? Especially when your salary when your income fluctuates, right?
Yeah, I think just me in my own head, I put a lot of pressure on myself with that, regardless if she made nothing or she made a lot of money. But yeah, she was on mat leave for a long time. Yeah. So yeah, there was a period where like I was paying like $4,000 in daycare, our mortgage, 2 cars, like it was a lot. But yeah, there was just certain things at work that were like not going my way, and you know, you have these little kids and you're working on your relationship and you're trying to manage all the different things in this like new world where like men are much more involved in like, you know, picking up kids and doing dishes and doing laundry. No, sorry, I don't do laundry.
The good ones are more involved.
Yeah, and it's a lot, and like you might be butting heads with your partner.
Yeah.
And I was like, you know what, I'm looking for something to like help me not let my emotions rule over me.
Yes.
Which I don't think men should do.
Anyone, really, right? When you lose control of your emotions, it's the ultimate, you're giving your outside world so much more control. You're handing it over. You are. And so that's funny that was the same thing for me, but I was in my 20s and I just didn't like how I allowed the outside world to shake me and affect me so much. That's what it was. And I was like, I want to be more centered and grounded. And I just, you know, I felt like all out here, and I just wanted to be more. And in my early 20s, I started my journey with Deepak Chopra, and it was like all the OGs, you know.
I've heard of Deepak Chopra. Yeah. So what have you done? Have you just follow them or?
I've read a gajillion books. One of the biggest books that changed my life in my late 20s, I guess, was a book, A New Earth by Eckhart Tolle. That was one of those like pivotal things where like it blew my mind, and there was pre that book and post that book. Really? And it's funny when I go back and watch or listen or read things that I was reading at the very beginning of my journey, my personal development journey, it feels so rudimentary now, you know, but it's so necessary to get you there. And which is just an indication of really how far I've come, because those things that were so new and perspective changing at the time are just normal now. They're just part of who I am today.
It's like your foundation.
In terms of how I handle myself, how I internalize things, how I don't internalize things, like just all of it. I'm just a more grounded person for the most part. Yeah. I mean, everyone's got their days, right?
Of course. Yeah.
But yeah, so lots of books, lots of that. I've done some coaching programs. I did the 3-day Tony Robbins Walk on Fire.
Oh, no way. That's so cool.
Unleash the Power from Within. It was amazing.
I used to listen to him when I was in my early 20s, and I thought he was amazing.
He had the flip charts, like he would draw with like flip charts, like his old stuff. Anything else you think that people need to know, or that you found like clients are surprised by, or a piece of advice that you've given clients a lot that has really helped them?
You know what, I can tell you what I tell most of my clients. I think like a big thing for clients is finding someone that you have a good connection with, because it's kind of table stakes. Like there's so many mortgage brokers out there, so many. I think it's important to make sure you're working with someone who knows what they're doing and they have your best interests at heart. So I tell all my clients, like, we don't give advice that's strictly in our benefit. We only give advice that's for you. And I give advice to clients even if we don't make any money on it. So I'd say, like, find someone that you connect with, because we all do the same thing. And you're going to be working with them. Like, teamwork is really important. I emphasize that. And so you're going to be communicating with these people quite often for maybe months, maybe a year until you find your home. So make sure it's someone that you enjoy working with. And ask a lot of questions. I'll tell my first time home buyers this, but even anyone, like I'd rather you have 100 questions than none.
Yeah.
Because it helps me understand that you understand. So don't be shy to ask questions.
It's interesting. So when you say find somebody who they know what they're doing, how can someone tell that this person or this mortgage broker knows what they're doing? Are there any like questions that they should be asking, and the answer to those will be the clue?
Yeah, I'd ask right off the bat, like, how long have you been doing this?
Mm-hmm.
Depending on your comfort level, like, you know, how many mortgages have you done? What's your experience with my type of situation?
Yeah, especially if it's unique and you're not just like salary and great credit score. You've maybe got some other issues.
Yeah, totally. And
which is like 90% of people.
Yeah, it's a lot of people, right?
Yeah.
And mortgages are all unique. They're like snowflakes. Like there's no mortgage that's one and the same. Everyone has their own unique financial situation. So yeah, asking questions to make sure that they really know what they're doing. And if they have Google reviews, like, yeah, that's a good indication too.
Amazing.
Yeah.
So I know you said you don't have social media, but where can people find you if they want to connect with you?
Yeah, you can just Google my name, Michael Pasquerelli. I have a Google review page. But yeah, I'm not a big social media guy. I used to be on it a lot. And I think just for like my mindset and mental health, I think it's better to just not be on there comparing myself to other people. It's just like, you know what? I've got a great thing going on with my family. And I think just keeping it like in my own little world is great for me.
Awesome. And do you have a website?
I do have a website. Yeah, it's treeviewmortgage.ca.
Perfect.
Yeah.
Awesome.
That's also the street that I live on. That's where we bought our first home. So yeah, Treeview
Oh, that's where Treeview comes from. I love that.
Yeah.
Amazing. Well, thank you for coming on my podcast, episode number 2.
Woohoo.
All finished.
Thank you so much. This was incredible. Thanks, Sabrina.
Awesome.